Hi there, Capital Funding's Mortgage Fund 1 investors. We're going to be trying something out and a little bit different. Each month, we're going to be sending you a video update of the Capital Funding's Mortgage Fund 1 performance. I know you've been receiving our fact sheet on a monthly basis through email, but we're also going to provide a little more in-depth analysis on our video, email, and distribution through our social media channels. So let's jump in and check out this month's performance. All right, here we go. This month was great. 11.61% annualized yield. That's our highest annualized yield since the inception of the fund. So very awesome. I know I enjoyed seeing that extra money hit my account this month, as I'm sure you did as well. And so May's record-breaking performance was on the backs of April's performance of 10.09%, which was also really, really good. When I set up the fund, my initial goal was to get this as over 10% return to our investors. And for the year to date, 2024, we're at 10.11%. So very exciting for me. I hope you guys are excited as well. The fund now sits at over $7 million. And the weighted average coupon is 11.57%. So we're really, really doing well. We're replacing some of those older, lower interest rate loans with higher interest rate loans based on the current market. And we're also adding a lot of origination fees as we have more mortgages satisfied. So some of you guys may be asking why the variance in the monthly distribution. It is not the same each month. And as you can see, since the inception of the fund, we've ranged from 9.12 all the way up to 11.61. So there is some variability, and that is because you guys share in the profits of the fund each month. So each month, as we take in interest income, origination fees, and any other fees and pay out our expenses, you receive 75% of the net profit of the fund that goes to you guys. So that's why, as that changes each month, your fund distribution will change each month as well. And a majority of that is going to be, like I said, the changing out of the lower interest rate coupons to the higher interest rates and the origination fees. As we get more capital in the fund, we're going to have more consistent originations and more consistent mortgage satisfactions, which is going to create origination fees. So we're trying to raise more capital, to put more capital to work, and to create more origination fees to increase your yield. Hopefully you guys may know somebody, or maybe looking at maybe possibly putting some additional capital into the fund to help us out. All right, so we're going to provide a brief update on Capital Fundings. We've got a lot of initiatives underway that I want to share with you guys so you know what's going on at Capital Fundings as well too. So first off, we're finalizing our loan servicing software transition from our old company to the new loan servicing software. This is going to be really, really good for us. Internally, it's going to help create a lot of efficiencies when we're processing these loans and payments. It's going to save us a lot of time. Externally, for our investors, for our borrowers, you guys are going to have access to a new portal. It's going to provide a lot more information, portfolio information as well too. Whereas our last portal, I felt really fell short, and part of the main reason why we transitioned to this new company. So that'll probably be released in the next month or so, but I know we've been working on that transition for the past 4 or 5 months. It just takes a little while. Also, we've just signed on with Funding Shield. Funding Shield is a company that's really, really big in the mortgage world. And what they do is they validate title companies. They validate title company wiring instructions. They do a lot of stuff to help make sure that the loans, the wires that we send out are going to be secure. And why is that important? Because with all the fraud going on, hacking scams, we need to make sure when we're funding a loan that we're sending it to the right place, and that title company has been verified for wiring instructions. We know they're licensed, and we know that they are actually who they say they are. So this is really important. It's an extra additional insurance policy for us as we're doing our fundings, and we think it's very valuable to not only ourselves but to our investors as well, to ensure that their capital is safe. July 10th is going to be our first ever webinar. This is a webinar where we're discussing the fund and the opportunities that the fund presents. It's very similar to the presentation that we do right now over at the Villages to groups of 40, 50 people at a time. Or we've actually already sent out a mailer with a QR code and And anyone that got the mailer can join us. Anyone that receives the QR code through any other social media channel can join us. And we're going to present the fund and the opportunities that are available with the fund and see if we can raise some more capital for the fund. Really excited about that opportunity. Also, we've engaged a London-based analytics firm that's going to help us create a proprietary risk analysis model. This is going to look at all of our historical originations, identify what is and what isn't risk within variables of our loans, and then create a model to where it can actually risk assess new originations. So we get a really good idea based on all the variables of our new loans, how risky that loan may be. It's also going to help us out with pricing. I think we're going to get more efficient using this information to really understand if a loan is much more riskier and needs to be priced that way, or if it presents less risk. So I think this is going to be a really cool tool. It's probably going to be over a lot of people's heads and possibly mine. But the good thing is that it's a relative score. So we're always going to be able to see what our new originations are relative to our old originations. And our old originations we've done for 10 years now, and we've not had a loss or a foreclosure. So we're doing something right. We've got a lot more going on. We'll share it in our next video with you guys, but hopefully you enjoy this. And if you've got any comments or any questions or are interested in maybe doing an additional investment in the fund, please reach out. All of our contact information is below. Thanks.